Welcome students. I hope some of the introduction basics you have already learned. So this is the third class. We'll be going deeper into elements of cost. We have already learned that the basic element of cost is material, labor and expenses. So today we will focus on material. Material is a very important composition of the total cost. Typically 40 to 80% of the total cost comes from material only. Hence, you have to pay a lot of attention to material. When it comes to the material, it is also direct and indirect. Whenever it is indirect, it is part of overhead. In material cost, in an organization, they will have something called as material control system. It is like an ERP. So it ensures that the right material is available at the right time. It is maintained in the stores at a sufficient quantity. The required material is already inspected and quality assured, and the purchase department makes the purchase at economical prices, and it reduces wastage and overstocking. So material control system is a system which controls the entire life cycle of the material from supplier to finished goods. The various departments are involved within. You have planning, purchase, stores, production, finished good warehouse. So this process flow you should have an understanding. If you are a working professional and working in a factory environment, you already know. But if you are a student and you do not have exposure of how organization work, you should understand this. Let's say you want to manufacture a mobile phone. So it all starts with the designer. Designer will go to the design tools. He will make a design and he will prepare a bill of material. What BOM consists of? It typically consists of list of direct material required to make that product. So you will have frame, so you will have glass, battery, headphone, speaker, all the detail of the design will be in bill of material. Looking at the bill of material, next stage is by the planner. Planner looks at the bill of material and prepares a purchase request. Planner looks at the production planned for that month and multiplies the bill of material parts by that production. Plus, he also keeps some extra buffer just in case. The purchase request goes to the purchase department. The purchase department, after looking at the purchase request, they will send enquiries to all the suppliers. So, typically, these suppliers are registered with the organization and they will send their quotation. So from here, enquiry has gone to supplier and offer has come from the supplier. Whoever is the lowest among this supplier, he will get something called as a purchase order. This goes from the buyer or the purchase department. Purchase order is a contract. What it says I need 1, 2, 3 in some quantity. This is the total price, and after this you will get payment after certain days. Also payment terms will be mentioned, where you have to deliver at factory. All this information will be there in the purchase order. The purchase order is received by the supplier manufactures that material and then he will pack and he will send it to the factory. Once it comes to the factory, it comes along with invoice and report. Invoice goes to the accounts department and finance department for payment, and report goes to stores and quality. After the verification of the inward goods and inspection, the quality department inwards the goods to stores. So material will be stored in the stores. Whenever the production team requires a particular material, they will issue a material requisition note, and from stores it will go to production. After the production, this will go and sit in the finished good warehouse. Again, there will be quality check here. So this is the typical flow of material from the designer board till the finished goods. So bill of material, the definition is list of parts and materials required. Material request, formal request from production department to the stores. Purchase request from planner to purchase department. Purchase order is from the purchase office to the supplier. Then receipt material transfer node is required to transfer material from one department to other department. This is the process flow which we learned in detail. Let's learn economic order quantity. So you will definitely get 2 mark question on this, sometimes 5 mark question also. Let's understand what is an economical order quantity. It is basically size of the order at which both ordering and carrying cost are minimum. You have to first understand what is ordering cost and what is carrying cost. What is ordering cost? Cost linked to ordering of material such as cost of staff, transportation, inspection, expenses, etc. So that means if I order once, I have to incur this cost. If I order twice, I have to incur twice. So this is ordering cost. Next is carrying cost. This is the cost of holding inventory. It's also called as inventory carrying cost. So this is nothing but your cost of capital. If you are buying something, you have to pay to the supplier, correct? And once you pay to the supplier, that amount you do not have, that's your capital, its working capital is gone. And if you do not consume that material, that means your working capital is locked. That is also a cost. So that is the cost of capital or cost of storage. This is the formula for EOQ. Economic order quantity is square root of 2AO divided by C. So here what is A, what is O, what is C, all these are important. A is annual demand. What is annual demand? How much of that material I need per year. So pay very careful attention in the problem and you have to calculate annual demand. Sometimes they will give weekly demand or monthly demand or quarterly demand. It can be for any period. So you have to bring that to annual demand first. Second is ordering cost per order. So if the question mentions I have to place 5 times order, you have to multiply the ordering cost by 5 times. Next is carrying cost per unit per annum. This is important. Cost per unit per annum. Typically in the question you will get some percentage, that is per annum 10 percentage, multiplied by unit cost, you will get carrying cost. If you are asked to explain what is EOQ behavior, what is the behavior of ordering and carrying cost, this graph will explain. As the quantity increases, carrying cost increases. Why? Because you have to pay more. Once you pay more, more working capital is locked. So that means your carrying cost increases. However, when the ordering cost, as the quantity increases per order, you have to place less and less orders. So if you are placing lesser orders, definitely your ordering cost comes down. If you place both of the graph together, you will end up, they will intersect at a point. This point is EOQ. At this point, if you measure the total cost, your ordering and carrying cost are optimized. Let us understand this with one problem. We'll take a simple problem. Pause for a minute, read the problem. So you should know the formula for EOQ first. So what is EOQ? EOQ is equal to square root of 2AO divided by C. Here, what is A? Annual demand. So let us study the problem. Anil company buys its annual requirement of 48,000 units. The question directly says annual. So no problem. We don't have to convert. So this is 48,000, correct? Next, what is ordering cost? It is ordering cost is 100. Again, given directly. So no problem. Third, you should know what is carrying cost. Carrying cost is estimated at 20% of unit value. Unit cost is 2. So carrying cost is 2 into 20%. So you have to calculate, you will get 0.4. Now you have all the detail. If you substitute all of them in the formula EOQ, so you substitute everything in the equation, you will get EOQ of 4898. So you round it off to 4899 or 4900 also. So this is your EOQ. So in the same problem, so this is the first part. What is EOQ? You have found out. Find the total annual cost of existing inventory policy. What does the existing inventory policy says? This 48,000 is ordered in fixed installment. That is the existing ordering policy. So that is the second part of the question. How to calculate it? It's very simple. You have to calculate what is the total material cost. That is first. Next, you have to calculate total ordering cost. Next, you have to calculate total carrying cost. And if you add all of this, you will get the total cost under existing inventory policy. Let us see the table. So total material cost, it is nothing but annual demand into unit cost. What is annual demand? 48,000 multiplied by unit cost is 2. So you will get 96,000. Next, you have to calculate ordering cost. To calculate ordering cost, what do you need? You need O, you need number of orders. Under existing policy, you know it is 6 numbers, correct? 6 into 100, you will get 600. That is your total ordering cost. Next is total carrying cost. How to calculate the total carrying cost? For that, you should remember this formula. Half into C. C is nothing but the percentage. U is the unit rate, which is 2, and quantity. Quantity purchased per order. How much is purchased? Here you are purchasing 8,000 units. If you order 8,000 units 6 times, you will get the annual demand of 48,000. So that is 1600. If you total all of that, you are getting 98,200. Now under EOQ, observe how the things change. Does the total material cost change? No, because again this is 48,000 into 2, no change. So this is 96,000 is the material cost. Here number of orders are changing. Why? Now I am ordering 4,000, let's say it is 4,800 I have to order. How many orders I have to place per year? I have to place 10 orders. So my ordering cost becomes 100 into 10,000. Then carrying cost. What happens to my carrying cost? My C is the percentage remains same, which is 10% or 20% in this question. Unit rate, there is no change. Quantity, I have to place for 4,800. So this will be my carrying cost. So when I add all of that, I will get a total cost of 97,960. So if there is a saving, mention that, or if it is an excess, mention that. Based on these, you recommend, after analyzing the problem, you recommend, yes, it is beneficial to go with EOQ, or it is beneficial to go with existing inventory policy. This is how an EOQ question will be there. So you have to solve some simple and complex EOQ problem to understand it better. We will also see another problem on EOQ. So you are now well versed. What are the terms you should look for in the questions? It buys in lots of 500 boxes, which is a 3-month supply. Okay. The cost per box, that is U 125. Ordering cost is 150. O is 150. Inventory carrying cost is 20%. What is the total annual cost of existing inventory policy? So they are directly asking total cost. How much money could be saved by employing the economic order quantity? That means you have to calculate EOQ first, then you have to calculate total cost under EOQ. So what are the steps? First, find the total cost, which is nothing but your purchase price, ordering cost, carrying cost. Then find EOQ. Similarly, repeat the same. Total cost is purchase plus ordering plus carrying. Then you will find savings. Now do this, try this problem for next 5 to 10 minutes, pause it here and come back. Hope you could solve the question and this is the answer. If you have got the answer, very good. That means you have understood. If not, don't get disheartened. We will solve this problem. So let us understand what is the scenario here. So let's look at the questions first. So you have to first find out if it is EOQ, you should know square root of 2AO plus C. This is the first equation you should know. Then second equation is To calculate the total cost, you should know material or purchase cost. This is first. Second is total ordering cost. And third is total carrying cost. If you total this, you will get the total cost. So, what is the total cost under existing policy? Existing policy is you are buying lots of 500 boxes every 3 months, correct? So that means you will have to buy this lot of 500 box 4 times in a year. So number of orders becomes 4. This is your existing policy. So each order contains 500 units. So what is the total ordering cost? Since you are ordering it 4 times and per order cost is 150, you will get 600. Total carrying cost is nothing but half into C into U into your quantity. What is the quantity ordered? 500. What is the carrying cost? 20%. And unit cost is 125. You will get 6,250. So this becomes your total cost. So total material cost is 2000 into 125. So that is your total material cost. So this is 2 and this is 3. One is total purchase cost, which is equal to 2000 into 125. If you add all of that, you will get 2,56,850. Next, the same thing you have to calculate for EOQ. So EOQ, you know, the formula is square root of 2AO divided by C. So solve for this. Annual demand is 2000, ordering cost is 150, carrying cost is 125 into 20%. So if you solve, you will get 155 as the EOQ. So if you need to order every time 155, what is the total number of orders? 2000 divided by 155, approximately you will get 13. So 13 orders you have to place. 13 into 150, 1950 is your total ordering cost. Total purchase cost remains 2,50,000 in this case also. Why? It is 2000 number 125 unit cost. Next, carrying cost, you need half into 20%. 125 is the unit rate. You are ordering 155. Here you are ordering 500. So there is a change in carrying cost. When you total it, you are getting approximately 3000 lesser here. So that means you should typically go with EOQ quantity because there is a saving. Hope you have understood EOQ question. So take this as a homework, solve it on your own and write the answers in the comment box. Sometimes you can get also problems which are not related to EOQ. This is such problem. There are two suppliers. One is supplying at 2.25 per unit. Another is supplying 2.15 plus 2500 fixed charges. In this case, what the question is asking, calculate the order quantity for which purchase price per unit will be the same. Second is select the supplier if the purchase officer wants to place an order of 15,000 units. In such case, what you have to see is what is the difference. So let's say supplier A 2.25. Similarly, supplier B 2.15. But there is also fixed charge. What is the difference? 0.10 per unit. So this is the difference. To recover fixed charge of 2500. So fixed charge is 2500. The quantity required to recover is 2500 divided by the difference. So this turns out to be 25,000. You can check this, you can validate it. So 2.25 into 25,000, 2.15 into 25,000 plus 2,500. If you calculate in both the scenario, the cost will be 56,250. So this quantity, the unit price of both the supplier A and supplier B will be the same. So this is the first part. What does the second part says? It says if he wants to place an order for 15,000 units, so then whom should you select? This is very straightforward. You have supplier A whose cost is 2.25 into 15,000. So you will get straightforward, you will get 2.25 into 15,000. You will get 33,750. When it is supplier B, 2.15 into 15,000 units, but there is also fixed cost. This you should not forget to add. So what will be the total? In this case, you will get 34,750. So whom should the purchase officer place order on? He should place order on supplier A. So this was something related to material cost. In the next class, we will again continue with the material inventory and other things. So till then, study it again.